This video is going to be the only SMT video that you will ever need because I'm going to explain both the basics and the advanced fundamentals behind how to pick a high probability SMT sweep. So let's start with the fundamentals of what is an SMT. If you don't know how to identify one, an SMT is where a liquidity sweep happens on one asset while the other holds discount slash premium. What this looks like is while NQ has swept this low here, ES has held this low in discount of this dealing range, right? And this could be done vice versa. So as NQ doesn't take this high, we can see that ES did in fact take this high. Now SMT is always the start of a new market maker model. This is referring to the fundamentals behind market maker models. We know that during the smart money reversal phase, there must be an SMT, and SMTs can only occur at smart money reversals. This means that when you do see SMT and you have lower time frame confirmation of it, which we will discuss in a second, it proves that the market will give you some level of movement, whether that's a large movement with a continued direction higher, or whether it just is a Judas and it will seek, you know, a small level of premium before the market completely tanks and drops lower. So we don't know what's due to occur, but we know for sure we should get some level of movement because of how market maker models work. The third point, SMT is only confirmed with lower time frame smart money reversals. So we need lower time frame confirmations after our higher time frame sweep. That way we know this low is bound to hold and it's not likely to just drive a little bit higher to then continue lower and then we don't have our SMT anymore. So we need these lower time frame confirmations. This could be in the case of an inverse fair value gap or a fair value gap, or maybe we have a breaker block, maybe we have a market structure shift, maybe we have a change in state of delivery or an order block or a reclaimed order block. It could be any of your choosing, but we need a lower time frame confirmation. Now the fourth point, the SMT swing point is the only safe high or low in the market maker model. When we get our SMT reversal at this low with our lower time frame confirmation, so our inverse fair value gap, let's say, as prices created this high, we know that if we assume the market's direction is bullish, this low will hold because this is the low that manipulation happened at. While ES took this low, NQ didn't. And so as the market rallies higher, any stop loss on this low or around this low should be safe because the market can come into deep discount, but it's unlikely it will take that low again. Something to note is, however, if you were to enter in this leg and put your stop loss on this low, because this isn't the safe low, price could come and sweep this low, creating a new SMT and a new safe low for the market to drive higher. So just be careful for where you put your stop loss. Now, let's go on to some of the advanced topics. How to choose high probability sweeps and SMTs. I've broken it down into these three components here: session highs and lows, daily highs and lows, high liquidity areas, so consolidations, and choosing key times of session opens and news events. So let's go over the first one, daily and session highs and lows. This is really important because the question we want to be asking ourselves is, which low or high has the most liquidity at this moment? So when price is at this point in time, we want to ask ourselves, which low or high has the most liquidity? If we just draw them out, because we don't know exactly which one, we would probably draw something like this, right? We could draw these lows and highs, I mean these highs here, but the external main highs are always going to be the better ones to choose. The ones that have more time, the more time between the liquidity being created. So price has had all this measure of time for people to put their stop loss on this high, which is approximately 15 hours. Whereas a high like this, people don't really have as much time to put their stop loss on this high. So you want to refrain from choosing these internal highs and lows, typically non-significant highs and lows. So there wasn't much candle time in creation. So for example, this low was created in pretty much one 15-minute candle. That means there's not a lot of liquidity below this low. Whereas this high has had hours to create liquidity above this high, creating this a higher probability sweep. Now, the second point was consolidation, so areas of consolidation. Sometimes you don't get the clean session highs and lows. So for this example, let's draw them out. We've got the clean Asia high. We don't really have a clean Asia low because there's a few lows created in Asia, so I would probably skip it. Here we have somewhat of a decent London high. This is a good London low. Then for New York, we have a good pre-AM high. We don't really have a pre-AM low. Like it's just here. But by the time market is open, it's only had like 1 hour. It's not really much. So, clear areas of consolidation, such as this, we know that this has built a lot of liquidity back and forth. So if we can leave some relative equal highs, for example, let's say that looked more like that, then we know that this is a higher probability point of interest for a sweep. Key times such as session opens and news events. What's really important about this is SMT occurs during manipulation. So we want to think, when does the most amount of manipulation occur in price? It's during session opens and it's during news events. If we look at an example that just happened recently, we can see that price had created our SMT between ES and NQ, where NQ had swept the daily high marked here and NQ hadn't. And this is still pre-New York Open because 9:30 opens here. So after this high gets swept and we create our confirmations, because look, we get a 15-minute order block, we get a 15-minute inverse, there's a 15-minute fair value gap in there. There's enough confirmation to suggest that this high should maybe remain safe and we should drop lower. However, that's not the case because we know 9:30 is a high level of manipulation. So once 9:30 occurs and we sweep the high again, this creates a higher probability sweep since we've had two things occur here. One, we've created a deeper premium in price as we've had a second SMT. And two, we've waited for the key time to create a manipulation forming the real SMT. And I would describe this one as the fake SMT. So we really want to wait for key times for SMTs to occur and try and take them right after. So the closer to your market opens and news event releases you get SMTs, the better. Now there's three important little tips that I think everyone needs to know, but sometimes they're not, in price for every SMT. So you want to look for PD arrays and SMTs between assets and a good distance between the SMT pairs. These link together because what this means is when you're looking for an SMT and NQ has taken this low, you don't want to see ES in a deep discount or even create equal lows because this has not created a strong bullish environment. This is a very weak bullish environment. Yeah, very weak bullish environment. since we would rather see ES hold a decent level of discount, maybe OTE, or maybe just about touching 50% of the range, equilibrium, and hold inside of a point of interest in this area. So we want to mark clean points of interests that are open, maybe open OBs, open fair value gaps, reclaimed order blocks. We've got all these different PD arrays we could use, while the other pair creates the SMT. And it's important to notice about, in this note, see good distance between the SMT pairs. So that describes how you wouldn't want to see deep discount touched on ES while NQ has its sweep. You want to see the strong difference between the two. You want to confirm SMT with lower time frame market maker models or a second SMT. That's what this little quotation here is. SMT confirms smart money reversals and second SMTs confirm the first SMT. So you'll see here that the SMT had confirmed that a market maker model was taking place. However, due to time, we wait for 9:30. 9:30 rallies, creates a new high, a second SMT in price, as you can see, which double confirms this as the real SMT now. So we've had a double SMT and we've waited for the key time. Typically, you can see this double SMT in 2 time frames. What that means is you might see a higher time frame SMT like this one, where this high gets swept. And then on the lower time frame, if we were to go on to the 1 minute, you would typically see a lower time frame SMT. Maybe let's assume this candle took this high again, whereas ES didn't. Let's say ES's looked like this. So ES looked like this, and NQ took the high, creating the SMT. This would be a double SMT because we've had a higher time frame SMT and a lower time frame SMT. Now, once we get our lower time frame confirmations, we have an extremely higher probability setup for a short. One last important point to make is there is some time frame alignment involved, where if you're looking for a higher time frame SMT, let's say maybe a weekly, looking for a 1 minute SMT can be very helpful. However, sometimes it's better to try and match the time frames. So you wouldn't want to use, for example, a 5-minute sweep with a 1 minute market maker model. You want your higher time frame to be strong. You want to search for these 4-hour highs and lows, like these daily highs and lows, the ones with larger liquidities, and then pair that with your lower time frame confluences, whether that's the 5 minute, the 1 minute, the 3 minute. It really doesn't matter. Time frames, they're all fractal. So I hope in this video I've described everything, because I believe I have. If I've missed anything, I'll type it in the comments. And if you've got any video recommendations, type them in the comments too, please, because we're going to create a full entire series going over every ICT concept, explaining in great detail everything. And hopefully that way we can build like a clean library for beginners and advanced traders that want to learn. So I hope you enjoyed this video. Like I said, if you've got questions, just ask them in the comment section. If not, I'll see you in the next one. Peace.